Imagine waking up to the stock market soaring or crashing, all because of a single tweet or a bold decision made in Washington. The stock market and Donald Trump's name have been so intertwined in the past few years that it's hard to talk about one without thinking about the other. But what does Trump's influence really mean for your investments, your retirement savings, and the economy? Let's dive into it. Before we get started, if you're new here and want to stay updated on financial news, politics, and how they all impact your money, hit that subscribe button. We're almost at 1,000 subscribers, and your support would mean the world. Let's get into it. Donald Trump's presidency brought a unique and often controversial approach to economic policies. A billionaire businessman before stepping into the Oval Office, Trump's influence on the stock market was immediate, dramatic, and at times unpredictable. Whether through trade wars, tax cuts, or his infamous social media presence, Trump's decisions sent ripples through the financial world, affecting both Wall Street and Main Street. Throughout this speech, we'll explore how Trump's actions shaped the market, what long-term impact they had, and how investors, like you and me, can learn from his time in office to navigate future market volatility. Trump's economic policies and the stock market. Setting context. Trump's presidency was a roller coaster for stock market performance. When he took office in 2017, the market was already on an upward trajectory, but his policies played a pivotal role in driving it even further. One of Trump's most significant moves was his Tax Cuts and Jobs Act, signed into law in 2017. This policy cut corporate taxes from 35% to 21%. The idea behind this was simple. Lower taxes meant businesses could reinvest their savings into their companies, which would ultimately lead to job creation, higher wages, and a stronger economy. And did it work? Well, the stock market seemed to love it. In the first year of his presidency, the S&P 500 surged by 19%, and the Dow Jones Industrial Average rose over 25%. The markets were clearly responding to the corporate-friendly policies, the trade war and market volatility. But Trump didn't just focus on domestic policies. He launched a trade war with China, imposing tariffs on hundreds of billions of dollars worth of Chinese goods. At first, this caused a lot of volatility in the markets. Every tweet or statement from Trump about tariffs had investors on edge, worried about the global economic implications. The unpredictability of the situation was a double-edged sword. On one hand, it sparked concerns about a slowdown in global trade, which would hurt corporate profits. On the other hand, it led to opportunities for investors who were paying close attention to the ever-shifting trade landscape. The market was up one day and down the next, making it a difficult time for long-term investors who relied on stability. But for active traders who could anticipate Trump's next move, it was a wild ride with massive ups and downs. The Trump tweet phenomenon. Perhaps no one in history has used social media to influence the stock market more than Donald Trump. His tweets, often impulsive and unfiltered, were known to have immediate consequences on stock prices. For example, his comments on companies like Amazon, Boeing, or GM would send their stock prices soaring or plummeting. Just one tweet could shift the fortunes of entire industries. Remember when Trump tweeted about Amazon's taxes, causing the company's stock price to fall? Or when he criticized Boeing over the 737 MAX crisis, causing a huge dip in their stock price? Trump's Twitter account became a stock market barometer for some investors, who learned to monitor his posts for signals. But this also highlighted the risks of the stock market being influenced by something as unpredictable as a tweet. Trump's handling of COVID-19 and its impact on the market. Then came the pandemic. The global health crisis led to one of the most dramatic market crashes in history, but Trump's response, through stimulus packages and relief efforts, also had a massive influence on the market. In March 2020, as the market was in free fall, the government passed multi-trillion-dollar stimulus packages, which included direct payments to individuals, aid for businesses, and other forms of economic relief. While the pandemic caused short-term pain for investors, it also set the stage for one of the fastest recoveries in stock market history, which was fueled by the unprecedented government support. Trump's handling of the pandemic led to a debate about the balance between public health and the economy. While the stock market bounced back relatively quickly, many Americans were left to deal with the lasting effects of the virus. The stock market's rapid recovery showed that Wall Street could rebound from almost anything, but for Main Street, things were much more complicated. The Trump legacy and long-term impact on the market. As we reflect on Trump's role in the stock market, it's clear that his presidency had a lasting impact. Whether it was through tax cuts, trade wars, or his influence on investor sentiment, his time in office shaped the market in ways that we're still feeling today. Trump's time in the White House demonstrated how much politics and the stock market are intertwined. Presidential decisions, whether they're related to taxes, trade, or even public health, have a direct impact on the market. And as investors, we need to be aware of that. Lessons for investors, what we can learn. Now let's talk about what we, as investors, can take away from all this. Trump's presidency showed us the importance of staying informed and adaptable. The stock market will always have highs and lows, but understanding the political and economic forces at play can help you make more informed decisions. If you learned anything from Trump's influence on the market, it's that we must keep an eye on government policies and global events. The more proactive you are, the better prepared you'll be for whatever the market throws your way. So, as we wrap up, I encourage you to keep watching the markets, stay informed about political developments, and always think critically about how government actions might affect your investments. And don't forget, if you enjoyed this video and want to keep up with more financial insights, make sure to subscribe to the channel. We're on the road to 1,000 subscribers, and I'd love to have you along for the journey. Thanks for tuning in, and remember, the stock market is a marathon, not a sprint. Stay patient, stay informed, and invest wisely.